and happy days. Righto, again, welcome aboard. Those of you who have joined us on the social medias, welcome to you. Those of you who have joined us in the room, thank you for joining me on this Monday, the 10th of June, which is a bank holiday here in Australia. Not so much all around the world, but here in Australia, some of us are lucky enough to be having a holiday. Not me. Hope your weekend was well and are you looking forward to a nice week of trading. Let's start as usual with looking at the gold chart. And here we go. We're looking to trade a breakout on gold as London session opens. Those of you who are joining us for the first time won't know what on earth I'm about to do. So let me explain what that's all about. The Asia session is primarily where I'm looking to break from, and we're looking to break out either long or short, don't really care. Hang on 2 seconds and I'll just change my background to the right one. There we go. Don't care which way, but it does have a few parameters around it. So what we need to do is isolate the range straight away so we know where we're headed. And the high of the range since Asia session opened is there, and the low of the range is the current bar, which is there. Now, what we're seeking to do, as I said, is find the breakout level and trade that into profit. At the moment, we've got price near the bottom of that range. The range itself is how strong or how weak, depends on how you look at it. About $13.75 at the moment, and we're very near to the bottom of that. Don't like the short because of the position where we're looking very much like a double bottom is forming. But what I do like is the range itself, it only being that $13. And our first profit looks to be around about the $19, $20 mark to the high side and about 40 to the low side. So if it did break out to the short end of the stick, then that would be a pretty decent old trade that we would take. Quite considering this, but I'd much prefer price was in the middle of the range before I took the trade. And the reason for that is it gives me a little bit of insurance against a tip in and in the opposite direction, or that's what we don't want to see, obviously. Something like that. That's what we don't want to see, right? And if it is very close to the bottom of the range, I won't take the trade. There's another minute or so remaining, so let's just see if that's going to be the case. If I do trade it, I'll be putting a buy order above this bar, and I'll be putting a short order below this bar. The entry for the short will be the stop for the buy, and the entry for the long will be the stop for the short. Getting close. Let's see if we're going to take that trade. I'll just make that a little bit more obvious for you. Yeah, I don't mind where it is at the moment. That looks okay. Of course, we'll be trading this at very small risk, but I will take the order. Let's do it. So we're going to place a buy stop a little bit above the high there. The high is at 2301.31. Let's call that 2302. So that will be our entry. Again, very small risk on this. Something like that'll do. It is a buy stop. 2302. Is that what I said? Yep. So 2302.00 is the entry. Stop loss will be just below the low of the range, which is at 2287.67. We'll call that 2287. That's 2284. And we won't worry about it. At least we will worry about a take profit. For the buy, it will be just shy of the weekly pivot, which is at 232263. We'll call that 2321. So 2321 will be the profit on the buy. And we'll place that order now. There we go. That's in the market. Now we'll place the sell order which will be the exact reverse of what we've just done. So let's go to a new order. This time it will be a sell stop. And the entry level will be, I can't remember it, 2287.00. Stop loss will be, can't remember that one either, 2302. And the take profit on this one will be down here at DS1, and the level for that is not going to show me. Let's call it 2257. That's going to be the take profit on that. Okay, if that needs managing at all, I will, of course, update that in the session. And if it needs managing post the session, I'll tell you exactly how I will do that. Righto, so gold breakout trade looking for, oh, by the way, those of you who are new, if one of these triggers, you need to cancel the other one, right? So it's an OCO, one cancels other. Righto, let's have a quick squiz around the place and see where we're up to. Firstly, updates on the trades that we took last week. We took, I think it was Euro Aussie, which was a shocker. And that got stopped out. I think I'll go to here, bring in Euro Aussie. So we took that trade, I think it was on a weekly basis. Yes, it was. And we were trading short underneath this bar, which, for those of you who weren't here, was a simple case of break, retest the trade line. So I was looking for advance, bounce, continue. Didn't happen. Finished up being a false break of that trade line, and pretty clear at that. One of my classic false break scenarios where we had a break, consolidate, back above, retest, and the entry would have been above that bar. Looks like today they don't want to know about that, of course, and that just makes me a little bit anxious. But I don't want to take any more trades on that at the moment. It's too unclear. So that was Euro Aussie. Pound Kiwi, I'm going to ask Ash about this shortly. Why on earth would Pound Kiwi rally its little socks off as a result of the non-farm payroll number being extremely good for the US dollar? Doesn't make any sense to me at all why that took off at the exact time. So this is no fluke. This reacted to the non-farm payroll number. And of course, I was short prior to that announcement, and stop loss is way up here, so we're not that concerned at the moment. But I would like to know why there is a correlation between the non-farm payroll number and pound versus the Kiwi. It doesn't make a lot of sense to me, unless the market just went completely risk off for that moment in time. And that was the result that we saw on pound versus the Kiwi. Still in that trade, but not looking fantastic. I do need a bit of help from the Kiwi this week, not so much the pound. The other trade that we are still in is Euro versus the Swissy. We're short Euro versus the Swissy. We've got our stops and entry at the moment, having taken our first profit. That one looks okay. I do have a little bit of a sweet spot for the Swissy this week. Not sure why, because I think ultimately it needs to cool off because it's had such a good run. But I think it's coming back this week, and I'll give you the reasons for that in just a tick. So Euro versus the Swissy, looking good, nothing to do there. We've had a breakout of the consolidation. Looks like we might have closed the gap early today as well, or very close to it. So looking for further downside on the Swissy. So that was the good news. Let me go to the currency indexes and tell you why I think what I think. Firstly, the dollar. And the dollar looks particularly strong going into the week, but I was looking for very much a pullback to this trend line or trade line so I could actually get into this. Pardon me. It looks to have gone pretty early in the day. That's the daily chart I'm looking at, but the weekly is the one where I gauge my bias. And the bias for me, having rejected the base of this triangle, now looks like it wants to go to the top, and I've got no argument there, has also come back above that horizontal level, which is about 104.65 from memory. So strong dollar. See absolutely no reason why that won't continue. Euro versus the dollar, upside down version of it basically, and similar to what I've just said. If you would expect the dollar to rally, then the euro, which these indexes are based pretty much primarily on versus the dollar. So I would expect that to come down at least to 107.40, which is that horizontal level there. So bearish the euro. I've got to be bearish the Aussie as well, because it's come back below this horizontal level, which is about 66.20. Let's call it 66. It's come back below that on the weekly chart. And despite the fact that, well, I won't say despite the fact, because we did see this big tweezer bottom sitting here, and we anticipated that we'd get up to a resistance level. Thought it might have been a bigger one, and that may yet be the case. But what I'm seeing at the moment is downside for the Aussie for the week ahead. Kiwi, a little bit different to that, because it has broken above that level that we've talked about this for the last 2 or 3 weeks. I think the Kiwi did particularly well against the dollar. You can see that, yes, it was a bearish bar last week, but that said, everything else closed on its low versus the dollar. The Kiwi did not. I think the Swissy was a little bit better than this one even, but this is why I've got a big bias long for the Kiwi at the moment, because it didn't. If you have a look at the Aussie, closed on its low. If you have a look at the euro, closed on its low. If you have a look at the yen, closed on its low. You have a look at the CAD, closed on its low. You have a look at the Swissy, didn't close on its low. In fact, it's had, yes, a big pullback off the high as a result of that NFP announcement, but it's still closed above and inside this range. Extremely bullish the Swissy this week for that reason, and the Kiwi is the same. I don't think I need to say any more now that I've shown you why. I think the CAD is in a bit of a bother, closed on its low. That said, it's still coming off this base, and I do expect over time that the CAD will get up to here, but I don't think that's right now, and it's very, very difficult to be bullish the CAD. Also had a rate cut last week, as we know, and the pound at resistance, both from a trend line point of view and a horizontal level, and came off its high big time. I expect some more downside on the pound. So bullish the dollar, bullish the Kiwi, bullish the Swissy. Everything else is either don't want to know about it or I'm bearish. That's where I lie going into the week. With all of that said, there are 3 pairs that I'm looking at in particular. Pound versus the dollar is one, and of course we can't forget that we've got the Fed out this week as well, which is going to make a big difference to a lot of currencies down the track. I think getting ahead of that might be really cool if you can, and pound versus the dollar is one that I'll be looking to do that on. Pound versus the dollar because, well, we've just had a look at those indexes, and the dollar looks strong, pound doesn't. Nice little tweezer top sitting there at a former resistance level. Looks a bit like a head and shoulders sitting there too. The problem with this one, if you wanted to trade it now, is of course you're trading straight into an untested monthly pivot. But a lower high here on a daily chart would make perfect sense to me to trade this short. That's pound versus the dollar. Second one is Kiwi versus the dollar. I'm not so keen on Kiwi versus the dollar because, as I said before, I think the Kiwi has got claims to be bullish this week, but not necessarily against the dollar because the dollar is very strong. Same applies here. Big reversal bar there last week, and the monthly pivot dead ahead. I'd much prefer to see a lower high in here before I traded that short. And the last one, also dollar centric, is dollar versus the CAD. And dollar versus the CAD, very, very strong. Bullish bar there last week. The problem with this one is not so much that we're close to the highs, it's that we've got a very, very big stop loss you have to put your stop loss under the swing here, in my opinion. And that doesn't give you much wriggle room to take profit at these highs, which I would need to do to be reasonably safe in the market. So like a lot of these pairs this week, I'm looking for a pullback. In this instance, on the CAD, you could probably pick that high, go through these ones, and I'd be looking for a pullback to here, either there or the horizontal level, which is in that vicinity somewhere. So if I've got a pullback there, I think you could place a buy order there at MR1 and a second buy order there if it went through there at the weekly pivot. So I think that is probably my favorite trade of the week, dollar versus the CAD, but it's got a pullback. And that's where I am going into this, what is it, the second week effectively of June. Hello, buddy Ash. How are you, mate?
Yeah, not too bad, buddy. How are you?
Look, top of the world down under as always.
Yeah, I'm recovering somewhat. We've had
How'd you have
we've had a no, well, no, there wasn't an IFP. There was a half term, and my daughter was in hospital last Thursday for an operation, so I stayed in the room with her overnight, and it was, you know, it was a broken night to be honest. So I'm
Right.
still recovering from that. I don't know actually, because I was looking forward to the summer the whole winter, but now it's here. I'm just exhausted. I thought it was going to give me extra energy, but I'm actually finding it's tiring me out more. Maybe I'm doing more. I don't know.
And how is the little one? Okay.
She's all right, mate. Yeah, I mean, you know, hers is a long term issue, and I think that the slightly disheartening thing is that the you know, the surgeon's basically saying this isn't it. We're doing something today, but this isn't it. So that's the sort of, you know, the thing that we just, you know, have to kind of get used to. But
Yep.
it is what it is. It is one of those things that, you know, you can't kind of. And I always say to her, it's not about fair or unfair. It just is. That's just the way it is, and it's just really how you kind of handle it and how you get through it. Which of course it will. Will be, you know, she'll be there in the end, hopefully.
100%. What's going
So,
on with trading, mate? What's the
well, do you
week
know,
ahead
mate?
look like?
You know, listening to you and what you were saying about that NFP number, that interested me as well. And I'll show you what I mean. You know, there was a few things that I found quite surprising, and there are also, when you're saying about the Kiwi pound, I think it was actually the Kiwi that moved, rather than the pound, because if you
Yeah.
compare the pound across the board, it was, you know, apart from against the Aussie as well. It was a Kiwi move, but what that is good for is that that's explicitly telling us that, as you quite rightly pointed out, that was about a risk off trade. Um, Risk just flooded out the market, but I find the number quite strange. I'm going to show you my screen, and I'm going to show you sort of like some of these data points, so we can kind of look through it, because it kind of came out of nowhere. This is last week's data from the United States. Not last week, actually. It might be. Yeah, that is last week's data. Now, if we look down here, manufacturing employment. So there was an NFP. So that's an employment number. So let's look at the employment numbers here and see what we can ascertain from this. Because manufacturing employment, that was the ISM manufacturing employment change. That was up, you know. But this is the outlier. Because when we go down and look at the other employment numbers here, Jolts job openings, that was a drop in Jolts job openings. That was a drop. We look down to ADP non-farm employment change. That was down. We look here, non-manufacturing. So the bigger sort of sector in the United States, that was slightly down from what was the forecast, slightly up from the prior, but still in negative territory, still in contraction. Anything below 50 is in contraction. That's 47.1. So that's contracting. Continuing down here, continuing jobless claims, that was up. Initial jobless claims, that was up. So we've got all of these sort of numbers pointing to a weaker jobs market. Even here, the unemployment rate up from 3.9% to 4%. And then you get this whacking, you know, and this was a huge change actually in non-farm payrolls. So that was a complete outlier. So the fact that the market reacted off that one number and in the way that it did suggested really that the dollar was a bit overcooked with the anticipation that the Fed are going to be lowering interest rates. And I think that's quite significant, because when you look at this week and the numbers that we got coming this week, the biggest number from the United States is going to be all about inflation. It's all about CPI numbers, and they're looking for about a 3.4% hold really in the inflation number. Now, my calculations bring us out in between 3.4%. So I don't think it's going to be above that. That's one thing that I don't think that we're going to get a shock to the upside with the CPI data, and we might get an easing to the downside. But the problem really comes with the 2% number, the arbitrary, if you like, 2% number that they're targeting. Yeah. Now, of course, it could drop below 2%. I think I'd say it would be a surprise that it dropped under 2%, under 3%. Sorry, it would be a big surprise, but it could happen. Given what's kind of been going on. But if you look at the numbers that we've kind of got going into this, and you can see just from the last one was 3.6%. There's not a whole bunch that would suggest that we are getting huge declines in inflation. Sorry, we're on 3.4%. Now let's have a look at the monthly CPIs and see whether we've got an indication that the CPI is dipping down. And if you see, it's always in positive territory. We get a few 0.1s, going along here, but there's 0.4. This is the last year, really. 0.4, 0.4, 0.2, 0.2. So there's probably about an average of 0.2 or 0.3 sort of like within this number. So because of that, when I look back over this and say 3.4, and the fact that inflation is still kind of growing, it would need to decline quite significantly to bring this down under 3%. And we're just not getting that. We're not getting those declines. So that would suggest that the number probably, if it comes in at 0.1, so the lower band of it, then we might be looking at a 3.2 number here. Probably we'd be looking at, we could be looking at sort of like around about 3% mark. So will the market weaken on a 3% number? Because this is all really, if we kind of go back to the charts, then we know that this is really all about anticipation that the Fed are going to be lowering interest rates, and they might lower interest rates. But when you sort of like think about the prospect of that, doesn't it suggest it would be quite irresponsible for them to do it? Now, if that is the case, if we sort of like assume that the market decides, even with a number below that 3.4%, if we sort of say, well, the market decides that we're not ready yet, then a short on gold is the play for me. We got this head and shoulders pattern kind of going on here, a big bar down here, which in my opinion will probably get retraced somewhat. Because it's just
because I want to get short and I can't get short there.
Yeah, you can't get short here. And mate, the reason I think this is going to get retraced is exactly back to the initial point of that NFP number. That NFP number looks a bit skewed. It doesn't make sense. What happened to that NFP number. And I think that
two in front of it instead of a one. Do you think?
I don't know. I just don't know where. I don't know why everything else. And that's all it is for me. How did every other labor market number aside from, well, how are they all weakening or in contraction? And yet you've got a massive boost in NFP over the month. It just doesn't really it doesn't make sense in some ways. But I'll have to go back and have a look, at how this connection's being made. But something looks wrong with that, with either the previous numbers or that number. Something just doesn't look right. Now, if there is a revision, let's say, on that number, or we get the kind of the next load of numbers, somebody intimates something else, then we're likely to see the dollar weaken again, and gold would have that little bit of a rally. But then we are basically trading the inflation numbers, and as I say, I think it's going to depend on how the market takes it, because I think the inflation number between 3 and 3.4 is the most likely. I think that's going to, I think it's going to miss to the downside of the 3.4, but that doesn't mean the dollar's going to sell off. You know, it might still be sufficiently high for everybody to go, well, the Fed aren't going to move. You know that because and they can't really. You know, there's a bit of weakness in the economy. The labour market, even though it showed some slack last week, it's nothing awful. You know, it's still pretty stable. And with inflation at 3%, they've got work to do. So I still see that that the dollar could strengthen, and gold's got some room. And if you look at gold on the monthly, then it does suggest that it's elevated here and it's overextended here, and we're getting these bars here which are effectively saying we're a bit early, and also we are getting a little bit less narrative around about the conflicts in the world currently. So while that's kind of going on, we may well be in a situation where there's less panic, there's less need to kind of go and buy this particular risk asset, and that would ease this to the downside. So I think gold's an interesting play this week to the downside, but it really will be about how people react to the inflation number, rather than the inflation number being, you know, what it is, if you see what I mean.
Yeah, I know what you mean.
So that's one thing. Now, of course, the information that we got last week, particularly from that pound Kiwi, but the Kiwi and the Aussie right across the board is also plays into this, because if we look at the Aussie, you know, as one of them, a massive drop to the downside, and the Kiwi the same thing, massive drop to the downside. So the dollar strengthens, and the risk on currencies, particularly, underperform. Now, while they're underperforming, then the question then becomes, if the number is between 3 and 3.4%, or maybe even less than that, do we actually then get, you know, the trade back on that everybody's then saying, all right, forget the Fed sticking where they are and trading gold short. We're actually going to say that the Fed are going to move. You know, we are sort of more confident that things are changing. Well, this then becomes a buy. And even though this bar is incredibly ugly, all it's done is brought the price right back to the structure. You know, there's no lower low here. This is still in an uptrend. You know, we got a higher high here. You could argue, I suppose, if you're looking at the close prices, but really this is still in an uptrend. It's just a very aggressive move back to the downside. So I think that's the trade this week, man. I think it's quite simple. I don't think we need to be looking around sort of lots of different things. I think we are basically trading the Aussie and the Kiwi long, or we're trading the dollar long, and then we can kind of like explicitly pretty much go for gold. I don't think it's. I suppose you could trade the Aussie and the Kiwi short off the back of it as well. So things like Aussie Swiss, you know, Aussie yen, even all that kind of stuff, I just don't think it's worth looking at. I don't think we need to look at that. I think we can literally sort of like go down to a basket of, right, well, what's with the dollar? What is that number going to tell us about the overall sentiment in the market? And of course, you can expand it out a little bit, and have a look at some of these indexes, which have also suffered. You know, the FTSE did start to suffer off the back of that NFP number as well. But the FTSE is another interesting one. And in actual fact, I think this is a long trade right now on the FTSE. I think it's worth a punt. This has been well within the uptrend scenario. A little bit lower would be good. When we look at this on the monthly, a bit lower would be good. Down somewhere to test this high or this cluster here. Whether we're going to get it, I don't know. But if anybody that wants to trade this at these current levels, I think they just have to be aware that what you're probably trading is the bet on the sentiment from traders about what the Fed are going to do next. I think that's what this is about. And really, the number that we got on Friday kind of tells us that. You know, the number and the reaction that we got on Friday kind of tells us that.
Do you think the punters have changed their mind? Like, it seems, and if you read all of the commentary around it, the pricing of the US dollar in particular is based on a Fed rate cut in September at the moment. That's priced in, according to the pundits. Did the NFP number change that? forecast, in your opinion? So
Yeah, I think it did, mate.
Yeah.
I think it did, and the reason I think it did is that I think what everybody's looking for to bet on that rate cut is a steady decline in the US economy, or an extreme decline in the US economy. You know, I think that at this stage, because traders try and get out in front. They're always trying to get out in front of the actual release, and the actual release has to be about inflation. Because even with a weakening economy and high inflation, so even if we kind of get a labour market which is struggling, we get PMIs which are coming out weaker and weaker and weaker. We potentially then get GDP kind of flowing through weaker, and inflation stays high. Even with that happening, people will bet on a rate cut, because inevitably, when people lose their jobs and the economy is weakening, eventually prices will come down. So the CPI might be lagging. Well, it will be. It'll be coincidental at that particular point. So I think that people are kind of looking that nobody knows when the CPI will get fed through. Nobody knows when sort of like things eventually take hold, but they are betting on the fact that eventually it will do. The problem with a high NFP number is that with inflation kind of like sticking where it is and it's high, with the NFP number, that's suggesting that the US economy remains robust enough to hold prices where they are. And the demand aspect of the economy is not going to reduce the price pressures. So that's the problem with it. With something like an NFP number that we've had. It's an outlier. Now the question is, does that outlier actually kind of eventually come to iron out everything else and show that the economy is actually pretty robust, or does it prove to be an outlier and everything continues to still erode? Because if it does, I think that we can bet on a Fed rate cut. And of course, the other thing,
there was a bit of a, I guess, balancing act or seesaw act in that, with wages increased at the same time. The NFP, the average hourly earnings, right? So that's inflationary.
Yes,
it's a little bit balanced. So to me, it's not 100% clear
cut. Not 100% what? Sorry,
it's not 100% clear cut that we are still going to see a rate cut.
No, you're absolutely right, mate. Because the thing is, and that's the point about the labour market. If you don't see a weaker labour market, then companies have to compete to get workers into their company. And how do they compete? They raise wages. And then while they raise wages, as you quite rightly say, it's inflationary. So we want to see a weaker jobs market if we're going to anticipate the inflation coming down. What I actually think is the most potentially the most telling is this, or the most dangerous, I think, maybe, is the mindset that a 2% range and interest rates somewhere between 0 and 3% is the norm, because I just don't think we're there. I don't think we're there anymore. I think that it might well be quite normal over the next 5 years potentially for the inflation numbers to be closer to 2.5% to 3%, possibly even a little bit higher. Or let's just call it 3%, sort of like, circa 3%, slight drop below, slight rise above, and interest rates remaining more like 3 to 4%, or 4 to 5%, 3 to 5%. So I wonder whether we might just be in this sort of slightly different paradigm. And that is really what we should be focused on, rather than expecting what people believe to be the normal, because it was the normal for so long. But actually, if you look through historically, that wasn't normal. Interest rates 0 was not a normal scenario, but we were there for such a long time. We've almost convinced ourselves as citizens that is where we are headed. So people sort of like almost bet on that narrative, rather than sort of like saying, well, hold on, maybe we're just caught in this different range now. And even though there might be an interest rate cut, it probably will be either the last or easing down, but then potentially, having to pop back up again as inflation sort of, toggles around this kind of 3% mark. So yeah, it's a difficult thing right now, mate, because until traders really sort of make a decision on and speculators make a decision on where they are comfortable, then we are really beholden to their reaction off every single news thing, rather than being able to see the news, or the data points in the cold light of day. Because as I say, a 3% inflation mark to me is still probably more indicative of the Fed leaving interest rates where they are, or if they do come down, they're going to come down, 25 basis points rather than anything else, which actually still, probably sort of strong dollar, which is weak gold right now.
Well, charts telling me weak gold. Interesting that the risk-off currencies, in particular the condols.
Yeah.
I see the Kiwi as the strongest of those three.
Yeah.
And I think it's Kiwi, Aussie, CAD in that order.
Yeah.
And I'm not sure if the Aussie and the CAD this week are going to perform at all. You seem confident that is going to be the case with the Aussie. What about the CAD? Interest rate cut last week.
Yeah, well, I wouldn't be sort of like confident necessarily that the Aussie's going to perform, and it's all going to be about that number, and how people react against that number. So if the reaction is something sort of like okay, they're cutting rates, then I'd say it's a given that the Aussie's the one to go for, particularly because of where price is. When it comes down to the CAD, I think the difficulty that the CAD has always got when you sort of like look at the kind of risk-on currency narrative is its brotherhood to the dollar, brotherhood to the United States dollar, and a much more difficult play if we look at that one. So personally, I would be probably avoiding the CAD with this particular scenario. Yeah, as you say, interest rate cut last week. The Canadian economy actually looks pretty good too. It doesn't look in bad shape at all. Comparatively speaking.
Oil's come off a fair bit too, I suppose.
Yeah, well, it has, and with an interest rate cut, then you would sort of you'd kind of be looking at it and saying, okay, fine, the CAD's probably got a little bit of downside. I mean, if we look at the CAD Swiss, which is one of our favorites, then big drops down in this particular currency pair. But ultimately, I mean, look at that. That's almost perfect for carving out an inverted head and shoulders down here. And I like this. I like the level down here. I still think that there's probably some upside for the Canadian dollar as well. But what we need to really look through is the history of this, and when it does tend to kind of do better against the Swissy, rather than just looking at this particular period, because what we need is to ascertain risk off versus risk on, and does the CAD tend to outperform when we see these lower interest rates? But looking back through history with actually I can't look back that far, but you can look back from this point here, back in 2014. The CAD Swiss has actually been in a long-term move to the downside.
Oh, amazing.
Absolutely. I mean, the Swissy is just an incredibly strong currency. If you look back over the last 10 years, it's had a great run. Are we near a bottom? Probably. But it doesn't necessarily mean just because we're near a bottom that this is actually going to reverse direction altogether. I think it's more likely that we get to a next point and we do the same thing, and stay in this kind of lower band, because the Swiss economy just is again one of the better economies, one of the better performing economies. I think the yen's the interesting one. It's almost handed the baton, if you like, to the Swissy to say you are now the risk off play, rather than anything else, because the economy is an absolute basket case. I mean, we had some GDP numbers this morning that surprised that they weren't as bad, but they are all in negative territory. That effectively Japan will be floating into recession, and yet they've got an incredibly weak currency. You know,
Yeah, I
so
think
anything,
that they'd be doing me a favor if they just took it off the charts. So I
yeah,
don't even have to
same, mate.
I don't even have to look at it.
Yeah, yeah, same. I mean, this
Because
is,
you just keep thinking it has to come down. Or everything against them
yeah,
has to come down. It's got to
yeah,
change. It's got to change. It's got to change. Yet every single time that they try and buy yen, they just get run over in a very
yeah.
short period of time.
I really don't know when it comes down to the yen. I don't know what they can do to make their currency more valuable while not damaging their economy further, because the economy is just, it's terrible. So it's in a terrible state, really. Um, you know, it's the only one right now with negative GDP. Of the, you know, a lot of the others are kind of floating into positive territory. We're sort of seeing this kind of global growth kind of going on. But I think it's an interesting period, mate. You know, really the question really comes down to, are we risk on, are we risk off to start with? That's the first thing you just have to ask. And the second question is why? Why is why is that, you know, our belief that we're risk on, risk off? And then the third question is, well, okay, well, how do I trade it? And as I say, I think we can get rid of most things. And I think we are looking at, you know, maybe 5 things this week, possibly going in. Now, the other thing that we also need to be aware of course, is sell in May, walk away. So we're basically in those summer months where we do get this economic lull, not economic lull, where we get this risk lull. You know, sort of like risk starts to kind of ease out of the market at this particular point as well. So that's another sort of like, you know, factor at play. Seasonally, the dollar is very strong this week, and actually sort of like going into the next month, it's very strong. So that kind of plays into a gold sell. The Aussie is not so good sort of going into the next month. You know, looking at the pound, that's not particularly good going into the next month either. I think the pound is a sell. And the reason I think it's a sell, and I think it's a sell still against the Kiwi, but where I thought the reason I think the pound is a sell is because I think the inflation narrative in the UK has come down to 2%. I think the next print we're going to see is going to be 2, maybe 2.1. I think it's going to be a
Yep.
low number. The question is, do the central bank, which are going to report the next day? So I think inflation from the UK is the 19th. The central bank announces on the 20th. But the question really is, do they do anything before the election, which is going to be on July the 4th? But really, they should. They should do something, because if it's not going to be political, if you like, then if the number says come down, they should come down regardless of an election. And I think that number is going to say drop the currency.
Yeah, it's interesting when you're in election periods, isn't it? How economic data tends to, I don't know. I'm not, and I hesitate to say manipulated, because that's not the word I'm looking for. But it's tenuous at
Yes.
election time, where you think, whoa, okay, is this really what the government needs to see? And if that's not what the government needs to see, is that kind of going to be what the government needs to see? If you follow my drift, it's
Yeah.
kind of
Yeah. Yeah.
esoteric, but
Yeah. Well,
you
there's no
tend to think
way. You know,
that
the current government.
something's bubbling on
Yes. The,
underhand.
the current government, mate, there's no way that they're staying in power, and everybody knows that. So you know, for the pound to be pricing in a changing government will be done. You know, because the Labour Party is so far ahead in the polls, and of course, you know, I think historically, if you kind of like have got a government that governs through hyperinflation, they're out next time round, because the cost of living is
Yeah.
just is blamed on them. You know, it's
Yeah.
not kind of, it's not blamed on anybody else. It's blamed on
Which
them
is
on them.
absolutely ridiculous, because it didn't happen just because they were in government.
No, it didn't. Well, there was one thing that they did very badly, and I don't know if you remember, but we had a prime minister called Liz Truss, who was in for a very short period of time, and she announced this mini budget, which did crash the pound for a period because it was just so ridiculous. And the country's probably still recovering from that to a degree. So they did sort of play a bit of a part in the decline of the economy, in the economic situation. But I think you still have to look at a longer term picture than a few months, because that's all she was in for. She was only in for a few months, and then she was gone. And I think actually, the government have done okay, but they keep having these own goals. And the Prime Minister recently left the D-Day. I don't know if you heard about this, but he left D-Day at the D-Day ceremony early to kind of come back and sort of fight the election. And it was just the worst faux pas possible. Because I think the problem is that the Conservatives over here are seen as kind of greedy capitalists. So the fact that he did that plays into that particular narrative, and it's, yes, the economy is important, but it's not all about money in the end. There are sort of other things that kind of pull on your decision making than just money. So they're out.
You would like to think so.
Yeah, you'd like to think so. Yeah.
Sometimes I think maybe that's not the case. All right. So going into the week, you're very clear on what you need to do.
Yeah.
I'm also clear, but slightly different. I've got those three currencies that I do like: the dollar, the Swissy, and the Kiwi. And I think in that order, probably dollar, Swissy, Kiwi. Dollar, Swissy, Kiwi. So I'll be looking for trades that suit that narrative. You'll be looking for what? Well, you did give us the best one. What was the best one?
Well, gold short. Right. Gold short would be yeah. Gold short would be a play. Yeah, it's really about the dollar. It's, we need to get to the right price, and if we're looking at a gold short, then I'd want to see a little pickup in price first of all. And I think that anything sort of like, if you're looking at in longer term time frames, then you're really looking at this area here. So it's the daily pivot, where the daily pivot currently sits. So hopefully it will get up there today. Where the daily pivot currently sits is, in my opinion, the first potential area. So it's going to be around here. Actually, maybe slightly higher. Let me just put this in here. This is the test area of the breakout from last week. Yeah, so that's pretty much where the daily pivot sits. So 23, 24 for me is a sell on gold, and I think that take that up price would be my play. Take it a price, maybe even stops up here, because it's got plenty of room to come down. So I think that one would be good, and it would be good today. But the reason it'd be good today is that if we can get a rally, if we can get a move to the downside into the CPI release, then you can get stops at break even. So that's kind of what you're hoping for with something like that. But by the same token,
well, that's our target on the breakout trade. Absolutely, the daily.
Right. By the same token,
that might work well.
That one is, yeah. So would be a possibility. This one is going to be slightly more difficult because this really needs to break back above. So problem is, if it's going to break back above on the CPI data, this is the Aussie dollar. If it breaks above on the CPI data, it may well be gone, but that'd be well worth looking at. But it's got to break above that trend line for me. I mean, I suppose you could be looking at that trend line, but we're still even below that particular price point. So the Aussie could be a long as well, and I think the FTSE as well, is an interesting play. My only negative with the FTSE, in fact, there's a couple. Firstly, we haven't tested the area, but I think more importantly is the time of year. This time of year does tend to be a little bit more, is a bit weaker for stocks. So I think the stock market is a buy, but I don't think the price is quite right here. So it probably won't be this week. I think more. I'll probably more looking at that gold versus the dollar, and the Aussie and the Kiwi versus the dollar as well.
Okay, cool. I did, and you answered me an email. I might as well share this with these guys. A product that's very, very interesting. Defense against drones.
Yeah.
I haven't sort of done much research into it, but it seems to me that sounds like a growth industry big time.
Yeah.
Given not just military zone, but that of course is the big market. And we came across this company called Drone Shield, which is listed on the Australian Stock Exchange. That company looks pretty strong to me, and I think you did a little bit of research into that and would agree.
Yes,
And
undoubtedly, mate. Yeah, the numbers, particularly this year, have been incredibly strong. I'll show you the chart of Drone Shield. So this is the number. This is the company we're talking about here.
this is an Aussie company, by the way, guys.
Yeah,
Not
I'm
owned
struggling
here.
to find where I can buy it.
I thought it was listed. Well, it's in their paraphernalia on their website. They say it is listed on the US Stock Exchange, but I couldn't find it.
No, I mean, look at this move, mate. 2024. Let's go from the first to 2024. There we go. So from here to where we are currently, that's up 263%. Now, it's got a much easier chance to get up to 263% because it started out at 35 cents.
Yeah, penny. It's a penny stock. Yeah,
it's a penny stock, and we're currently sort of trading at 129, so 130. $1.30, but it looks amazing. I mean, it was struggling down here for a while, but what I find sort of like quite interesting is that as soon really, I mean, it's sort of like if we kind of like go back to the start of the invasion in Ukraine,
yep,
it kind of floated around for a while. Within that, but it did then really start to move at this point. And unfortunately, we weren't aware of this company at this point because this, it's a beautiful kind of like play back to the trend line here, back to this trend line, and kind of create this this lovely sort of like dip and breakout. But it's just whether we kind of look at something like this and say the parabolic move is a bit problematic.
yes, the price is not where you'd like it to be right now.
No, it's not where you want it to be. But I think this is the earnings. Let's see if we can look at these financials. But look at these financials. I mean, it is astonishing, really. Can we see? Look at this down here. The annual.
The
Look
US
at
government have just given them a contract as well. I know it's only small. It's only
yeah,
5.7 million or something like that.
Yeah.
But yeah, the US government interested in that company is interesting to me.
Yeah. Yeah. These are the earnings.
And Mohammed, you're dead right. Drones are used a lot during the war, and
yeah,
there seems to be a couple of wars going on around the place, and maybe that's no coincidence that this company's doing okay.
Yeah, if you were sort of a genuine stock picker, this is what you'd want to see. Just growth every year. 2017, and this is before we had sort of like the conflicts going on. This suggests a well-run company. Going up, and then just a massive move kind of going up at this point. Hardware 47.27. I'll tell you what's an interesting number here, mate. Is this, I don't know if you can see that well from your end, but there's subscriptions at 1.339 million. That's the kind of number you'd want high. If that number could really start to expand, so they're literally sort of like getting residual income for doing very little work, then that would make it. In fact, you can see it maybe here even better. It shows it sort of a breakdown. But the subscriptions are.
Okay.
Oh, this is just on TradingView.
Okay, cool.
Yeah, TradingView. And if you click on the financials, you can kind of like scan through some of these things here. But every single year, hardware is growing, and a massive look at that. From 2022 to 2023, it tripled. The actual hardware tripled in sales. The same with services. The same with subscription. More than tripled actually from subscription. So it really is every single metric here is showing that this company is growing. Really, really good. Earnings as well, same thing. We're sort of like seeing H22, H2 of 22 to H1 of 23. It's but you know, better than it was. There's no dividends, and you can look at these sort of like down here. This is where it is, but PE ratio at 92. You know, that's sorry. Yeah, PE ratio of 92. That's getting a bit lofty. So that would be the only sort of thing I think from here. And I did read a statement from the CEO, who was still looking for growth, but it was sort of growth that might suggest another 50% on the numbers. So I think you'd want a retracement, but you know, it's coming down maybe to around about the dollar mark. That looks pretty interesting. That looks like an interesting sort of area to potentially sort of take it on. This the monthly charts. Look at that.
That's Elon Musk launching SpaceX,
Yeah,
isn't it?
yeah, it is, mate. I mean, will it ever come back down to 40 cents? I mean, that'd be the sort of like where you'd want it, wouldn't it? But yeah, literally the play this year has been all about this company. You know, greater volumes down here, so there's everything to like except the price.
Except the price, exactly. But yeah, I thought I'd bring it up because I think it's one to follow.
Yeah, yeah,
Not to
like it a
buy
lot.
right now. I'm not suggesting you buy it right now, but everything looked good to me when I was having a look at it. And you agree, and that's fantastic.
Yeah, I totally agree with this one.
All right, euro dollar. Let's talk about euro dollar because it's got a couple of things there today that that look interesting to me. One of them is that the gap hasn't closed yet.
I'll just pass you the
And
screen, mate, if you want it.
okay, cheers. Right, I'll do that. So a couple of things with euro dollar, and we know, of course, that euro dollar loves the daily pivot, and the daily pivot is up here. The monthly pivot is here, just before the gap, and that to me looks like something to watch out for during the course of the day. How I will trade that is just the way I do it. So I'll be looking for a base, then a higher low. We seem to have a little bit of a base form there on the 30-minute chart. I'd also be looking for a trade line, which I don't have. There's just nothing available to me for a trade line. I haven't got any highs, haven't got any lows that I can join. So that's a bit of a shame. But if throughout the course of the afternoon for UK guys and into the US session, if there were some higher highs here and we could form a trade line, then a false break of that trading up to this area, you'd need to take some profit or get safe at that monthly pivot area, which is of course the close of the gap. And I think the target needs to be the daily pivot. So if you can find a way to trade that, then happy days. I think euro dollar looks particularly interesting today. Agree with golds. I have that on my little watch list as well. And as Ash has pointed out, does look very much like a Head and Shoulders is formed. That makes this the neckline. And a few ways to trade this. If I did get a break of the neckline and a retest of that, I think the sell, I'd be happy to sell it back here at the neckline. If it did break, I would also be happy to find a lower high in here. Around about the monthly pivot area would be ideal, but certainly at the breakout area, which is where we've got our target for today's breakout trade, around about that 23.20 odd mark. I think that would also be a buy. Sorry, a sell. Maybe we could get two going for us here. That buy up to the weekly pivot, then the sell makes perfect sense to me. Other than that, I've shared everything I wanted to. So again, the three for me, and I think dollar CAD. If I can get an entry on dollar CAD as maybe a buy here or a buy here, that makes sense to me this week. And the Swissy, I think, is got good value. I'm already in Euro Swissy short. I think that can continue to sell. And pound Kiwi is the one, as I said from the outset, I was completely shocked when I woke up. I knew that the NFP number was strong, but when I woke up and saw this, I thought, nah, what the, that's what I was thinking. I couldn't believe it. But anyway, it is what it is. I have to put up with it. Hopefully that sells off during the week and gets us back into profit. It's a big ask from here, I've got to say, and I will be monitoring this to see if there's an exit point for me somewhere that might save me some money. We'll see. I think that's it for me, mate, for the week. I've
Great
shared
stuff.
everything I need to, and I think it'll be an interesting week ahead with those numbers coming out, CPI, Fed, and there's a few others as well. I think Aussie's got unemployment data coming out. I haven't really had a strong look at that, but I think they're forecasting unemployment to go down. Not sure that's going to be the case. We'll see.
Mm.
Anything to add, mate, or shall we get out of here?
Yeah, let's get out of here, mate. Yeah, I think we covered quite a lot. I think we know where we're at for the week and what we need to see. So yeah, let's get out of here and see if we can make it come to fruition.
All right, hang on. I've got a little notification in chat. Oh, you're welcome, Mohammed. Have a great week ahead, everybody, and we look forward to your company next week when we'll do it all again. And hopefully, we've all got some pockets bulging with some cash that we've earned over the week. Have a good one, mate.
Yeah, you too, buddy.
We'll catch up next week. Have a good one, everyone. Bye bye for now. See ya.